What is S2F, stock-to-flow? A tool for predicting the price of Bitcoin is stock-to-flow. On the graph above, a line is drawn to represent a projected price level based on the proportion of Bitcoins in circulation to those being produced, mined, annually. The predicted price of Bitcoin at that specific moment is indicated by the score on the stock-to-flow line. You may view the predicted price by moving your cursor over the line on the chart. As the price of Bitcoin has so far largely followed the stock-to-flow line, it has generally predicted price properly. The stock-to-flow number, S2F ratio, rises as time goes on because less Bitcoins are being mined, which means less supply is entering the market. This model therefore predicts that Bitcoin's price will rise in the future. Details: Bitcoin is compared to commodities and precious metals like gold, silver, and platinum in the stock-to-flow paradigm. These goods are referred to as store of value commodities because to their relative rarity, they hold their worth over extended periods of time. It is challenging to notably increase their supply. For instance, finding gold and then mining it are both time and money-consuming processes. Due to its scarcity, Bitcoin is comparable. It's the first ever rare digital object that has ever existed, in fact. The 2 million coins that remain to be mined will require a significant amount of electricity and computational power because there are a finite quantity of coins in circulation. As a result, the supply rate is generally low. Why is stock-to-flow useful for investors and traders? Because it can be used to predict where the price of Bitcoin might go in the future, it is helpful. Although there are many other factors that can predict the price of Bitcoin, this particular tool is focused on the Bitcoin supply plan. How to read the graph? The price is shown superimposed on top of the stock-to-flow ratio line in the Bitcoin chart above. As we can see, the price has stayed consistent with Bitcoin's stock-to-flow throughout time. Therefore, according to the theory, we can forecast price movements by looking at the anticipated stock-to-flow line, which can be estimated since we already know the general mining schedule for future Bitcoin mining. The colored dots on the price line of this graph indicate how many days are left before the subsequent Bitcoin halving, also known as a halvening event. During this time, the reward for mining new blocks is reduced by half, which means that miners will receive 50% fewer Bitcoins in exchange for validating transactions. Every 210,000 blocks, or roughly every 4 years, until the network has produced the maximum number of 21 million Bitcoins will be cut in half. Because of the increased stock-to-flow ratio, scarcity, prices should theoretically increase. This has always been true throughout Bitcoin's existence. In order to smooth out the market movements brought on by the halving occurrences, the stock-to-flow line on this chart integrates a 365-day average into the model. We also built a free extra tool for you to utilize in addition to the primary stock-to-flow chart. It is a divergence chart tool and is situated in the lowest portion of the chart. It illustrates the distinction between stock-to-flow and price. The divergence line changes color from green to red when price rises above the stock-to-flow level. The divergence tool changes from red to green when the price drops below the stock-to-flow line. This makes it simple for us to observe how price and stock-to-flow interact throughout the course of market cycles. The term, stock-to-flow deflection Bitcoin, is also sometimes used to describe this divergence line. Data source: the supply schedule for Bitcoin serves as the primary data source for the stock-to-flow Bitcoin graphic. This represents the total quantity of Bitcoins that have already been mined and will be mined in the future. We know exactly what the supply schedule will be in the future because it is predetermined by the Bitcoin code.